All right, let's do this. I'm Spencer Israel. That is Jeff Macke from Macke's Retail Roundup. Jeff, we don't normally do this, but it is retail earnings season, so we got to go live. We got to talk about some companies that have just reported, some companies that are going to report, in particular, Walmart, which is kind of like you call it the Daytona 500 because it just kicks off at the start of the season. Is that right?
Yeah, it does. I mean, it's you don't know anything until you heard from Walmart, and you kind of know a little taste of everything once you do. It's these seasons unfold like great movies or good books, and not that Marvel crap, but I'm talking really good books where you get kind of a hint of everything, a prevision of what unfolds later. So a lot of Chekhov's discretionary spending is going to be seen when Walmart reports. They're the biggest company on earth, 650 billion a year, and that's kind of just in America. So you're talking just a monster amount of revenue every single day. It's your freshest insight, your best kind of economic report that you're going to see. 90% of America lives within 10 miles of a Walmart. So it kind of is everybody's company. And honestly, if a company this big and this prominent can be a hidey hole for investors, that's what Walmart has become. And so we need to hear kind of a laundry list of stuff from them tomorrow to really get a vision on what's going on with the entire economy, let alone just kind of my consumer world.
I was going to ask you, why is Walmart the most important earnings report of the year? But you just kind of said it is because Walmart. I thought they said Walmart versus America. No, it says Walmart is America.
Walmart absolutely is 100% America, which used to be kind of a hot take, because it was kind of seen as a less classy place. But they've stepped up their game a lot and taken share and really is just kind of America's company. If you're doing $1.5 billion dollars a day of retail revenue, you have a pretty good idea of what's going on with the consumer. And people, investors are behaving accordingly. That kind of stability is something you want. This is the XRT at the bottom there. That's kind of just consumers. Costco, which is on a legendary heater, and that's Walmart, 60% over the last single year. Like, I realize this is not a very sexy company. They sell animal feed and detergent and a lot of groceries. But you know what, man? 60% is pretty damn good. And it's up 8% this year and kind of just quietly chugging along. Not reporting anything great. It's expensive. There's a lot of reasons to diss it. But man, you got to pay attention to these guys because all the water kind of flows from this big central lake.
Jeff, is Walmart a consumer discretionary company? Is it a consumer staple? Or is it both? Is it all of the? Does it not matter?
Let me just say yes. Yes, it is. It's all those things. Biggest grocer in the country by far. In second place is no one. They don't give a crap who's in second place. They honestly
there is no second place.
There is no second place. They're like they couldn't even tell you themselves. But that's you're talking about a $300 billion kind of grocery enterprise, and that's before you get to discretionary. It's before you even talk about the other stuff they sell. And and for that reason, and kind of just by the way the calendar always works, Walmart really kicks things off. We've heard from retailers so far. We've heard from a lot of consumer-facing companies, but if you're Target, you don't report before Walmart. It's almost just like they show it respect. Even Home Depot, largest home improvement company on earth, a huge company in its own right, probably third or fourth biggest retailer in the country. They wait for Walmart. Lowe's waits for Home Depot. Everyone just lines up like little ducks and ducklings. And so we're going to hear from a huge list of companies that we've talked about on this very show in this very space over the last 3 months that we've been doing this. And so yeah, I'm a little giddy. It's exciting.
So you want to, if you're a retailer, you want to wait till after Walmart, see what the big guys say, and then that might maybe give you some more color. So
you're not going to be responsive to it, but yeah, I mean, it's you don't want to come out and just kind of complain like how much is Walmart going to complain about tariffs? I mean, what are they going to say about that? That's going to give Target context, at least if Target's smart when they report, for when they come out there and say it, because they can't be on entirely different pages. Walmart's got enough juice to kind of pull this situation towards them and take share. Everyone else is playing defense right now.
Yeah. So here's a calendar. Like I said, we have heard from some consumer retail companies. We heard from Crocs last week. We heard from On this week. We heard from Under Armour today. But Walmart is the big one. So let's talk about it. What should we expect to hear from them tomorrow?
And absolutely nothing all that great on the surface of it for a company that's up 60% for the last year. They're looking at like 250, 260 for earnings for the entire year. I want to see if they can hold that guidance, but you can do the math pretty fast. It's about $100 stock. So they're trading at 40 times earnings. That's expensive for a company that's growing at 3 to 5%. So they kind of need to be perfect. And they also need to really lean into the idea that they have other ways of making money. The reason that Costco, Amazon, and Walmart have really kind of dominated the consumer space this year is they win at least a little bit when everybody else loses. They gather up market share. And so when we hear from Walmart tomorrow, you're not just listening for kind of what Walmart says. I expect them to be kind of in line. I expect them to hold their guidance, and they're not really spike the football, let's hop around and give each other high fives type of guys. And so what they're going to say is they'll make some noise about who's going to be eating the tariffs and trying to hold prices down for consumers. That's what Walmart says over and over again.
When you say hold the guidance, you mean they're not going to give guidance?
Well, that's the big question. It would be surprising if they pull guidance, but it's also it's are they going to cut? They cut their forecast last quarter. If they cut again, you're talking about a stock that becomes 50 times earnings pretty fast. I'm less concerned about that. Like Amazon, like all the other great companies out there, Walmart, it's really a matter what they're trying to invest in, what they're trying to do with their money, less than it is what they can earn next quarter. Because a company this big, they could fudge it one way or the other. But what we really have to hear about is, okay, can they hold the guidance? Is there enough clarity out there that this is a company that is on a hotline to the White House? And so if they don't have enough clarity to tell you what they're going to earn for the rest of the year, nobody does. Have consumers, have they pulled forward spending? We heard about some hoarding. All of a sudden now we've stopped the tariffs. And so that's spending in two different forms. That's how much goods the companies are going to order, how much product is Walmart going to get into the pipeline while the tariffs are still low, and how much have consumers kind of gathered up goods, and how do they place their orders? It affects the economy in so many different weird ways. Think about like Christmas trees. If you're buying plastic Christmas trees from China, you're going to order every day on one of the things, and they're all going to get here in August, because you've got to do it in the next 90 days because it's going to get more expensive. And so, I want to hear from Walmart a little bit of the soft kind of how are they massaging their supply chain to keep America in stock? And that's going to tell us a lot about what's going to happen for Target next week.
So, Jeff, Liberation Day was April 2nd. So that was about 6 weeks ago. Is that enough time for any company or Walmart or anyone else to really see an impact and at any point of their supply chain or with their bottom line or anything like that?
Oh yeah, you crack the whip. There's nothing easier to get rid of than someone who works at the docks. Say, infamously, it's the on the waterfront for you youngsters out there who haven't seen good movies. But these people they come and go with employment, and so when the cargo trucks weren't coming in, that supply chain stops right away, pretty fast. When the consumers are spending, and that's again why Walmart, why Amazon's the same way. They're run by people who are smart enough, they're in good enough control of their business that they can tell you in real time what the consumers are doing, and they will tell you. With obviously they're kind of biased towards favoring themselves, but Walmart will tell you if people have been hoarding up, if they've been gathering goods. Americans go buy toilet paper pretty much anytime there's an emergency of any sort. How toilet paper sales been in April? We've heard, there's this idea that the consumer is going to be weak, but you and I both listened to the on-call yesterday. The good companies are kind of like weak. Yeah, we're selling shoes as fast as we can possibly make them. So it seems pretty good to us.
That's why I ask, because we haven't seen anything show up in the economic data. Economic data is notoriously lagging, obviously. So we haven't seen anything show up yet. We have inflation. We have disinflation still, right? And we haven't seen anything to suggest that we're heading into a recession yet. Walmart has the power, though, to send like a viral headline through the interwebs with if they say people are stocking up on toilet paper and bread, and that's the kind of headline that has the power to fan some flames. So.
Right. And it's not always the case. Walmart is run by the CEO right now is Doug McMillon. He's been there for a little over a decade. Insanely well respected, just the kind of guy who, he's like Nickel at Starbucks. Just you can't meet someone who knows him who doesn't say, "Well, hell of a guy." Worked at the docks when he was a kid at Walmart, and now is the CEO and running the company, doing a great job. but people are going to be reading him and what he says and what he has to say about how consumers are being impacted by the tariffs, pretty closely, really, really closely. And I tell you the other thing, and why Walmart's such a tell, they're 60% grocery. So that's 300 odd billion dollars a year. The rest of that's discretionary, but that still leaves a huge amount of discretionary. Now, Target's about 50-50, maybe 60% discretionary. So it's possible that Walmart could come out, report great numbers, and basically kind of take a crap on the discretionary market. And that'd be terrible for Target. You would think these companies would overlap quite a bit, but that separation, that spread, if you will, of just execution, performance, and what segments they're focused on, really kind of makes Walmart to tell for a lot of companies. What they say about discretionary also affects like Best Buy. It affects Dick's Sporting Goods. I mean, Walmart's accidentally just so huge in these segments that they really are kind of dominating the space in a way that, the way Amazon took over shipping, just because they needed to do they needed to do Prime 2-day deliveries, and so they recreated UPS.
Yeah. Speaking of Target, they're on the calendar. They report next week at, what is it? Is it Thursday, I believe?
It's next Thursday. Yeah. And so they're going to politely wait behind Walmart, and then they're going to report. I think the company's in trouble, Spencer. They gave back the entire rally. The stock isn't behaving well. And really, we don't expect terrible things from Walmart. At least I don't. But I don't expect them to say anything good about the discretionary, just pure sort of what are people buying and are they showing up in stores right now and buying today? And so if Walmart comes out and says, hey, people can't get enough T-shirts and underwear, that's going to be okay for Target. But Target's getting a huge amount of their profits from discretionary product. And I don't think that they're going to have it this quarter. And I don't think they're going to see it for the rest of the year. And so as you pick apart Walmart tomorrow, kind of take a look at what's going on with the rest of the world. You can see Target for years. If these two got out of whack, you would just you'd short the one on top and get long one on the bottom, and they would just kind of regress towards each other.
In lockstep for a long time,
for decades, and Target just kind of trailing behind a little bit, but in generally the same direction. It's just been a 3-year boot stomping, just an absolute merciless rout over the last 3 years. I don't know when that reverses, but it's probably not going to be tomorrow morning. And I think with Target, you're a long way off the lows. Not so much in terms of what they're Target themselves, but these companies that are just kind of lagging. Nike should probably be a little higher if they weren't fundamentally as screwed up on this news, right? But these bounces are looking a little tepid for some of these companies. American Eagle, that's the next one we're going to talk about. Yeah. They absolutely took it. They came out with just the equivalent of a shrug this morning, where they just said, yeah, our first quarter didn't really work out the way we thought. We're going to lose money probably. Yeah. And we're pulling guidance for the rest of the year because we have no idea. That's bad news. It's like, other than that, Mrs. Lincoln, the play was pretty good up until my husband got shot right in the head. You would expect that to take the rest of them all down in a bad tape. But Gap, which is a name that we're both familiar with, continues to scream higher. So you're seeing a real separation between the haves and the have-nots. Target, Walmart, one of them. Gap and AEO, Gap is set to report in 2 weeks. American Eagle kind of pre-announced already. So I'm not sure what the tape is telling us, other than there's a strong preference for some of these stores over others. And maybe that's what sort of a choosier consumer means. It means they're simply choosing not to shop at all at secondary stores or places that just don't delight them.
American Eagle down about 5% at the time that we're doing this video on a day where the market
kind of taking it like a champ, right? Like down 17%. And as you would think they would be. American Eagle is I used to trade them with A&F, and because they were kind of lockstep. They were both sort of forgotten names almost a decade ago. And American Eagle just never really found its stride. They kind of find a way to screw up a lot. And that was really what happened last night, is they just kind of missed entirely. We have too much inventory. We missed. We're taking this massive write down. You can't do that over and over again and not expect it to kind of whack your stock. But, these companies are way off the highs, man. I would have expected that to be like a 10, 15% miss. 2 weeks ago, they would have taken the stock behind the woodshed and just beaten it mercilessly for 500 hours and
That's
probably been $2 a share.
Exactly right. Sometimes it's not about what you say, it's about when you say it. If this report from American Eagle was 3 weeks ago or a month ago, it would have been good night. But
there just would have been no defenders for the stock whatsoever, just none. And that's kind of the most bullish thing about this tape. This tape's about to get really expensive because earnings are going to get cut. Earnings are going to go down, and also the multiples are going to look bad, and it's going to be like a cyclical stock where you buy when the PE is high because that's when people believe in it the least and their earnings are repressed. But man, it's like, there just would have been no support for it. But I'm worried that we're going to get, as this kind of drags out a little bit, and it turns out that 90 days is, as things don't go absolutely perfect from here, keep an eye on American Eagles of the world. Keep an eye, especially on Target, Nike, other companies that got caught in this thing while they were in the middle of trying to turn something around or really reverse their fortunes. This is a really bad time to go about doing it. And so, we've seen some really good bounces. Let's see if we can hold them over the next 2 weeks.
It's really a shame about American Eagle. I've never owned the stock, but that was my mall retailer of choice back in the day. Way back in the day. So
they should have been so good, man. They could have been contenders. Back when Victoria's Secrets was its creepiest, AEO was competing and just in this beautiful little space where they could have taken all the share in the world in undergarments and just made a fortune, and they didn't do it.
All right.
Oh well.
On holding, aka on, because that's the ticker. This is one that you've been talking about all week. I actually only caught kind of the highlights of their report. So what did they say exactly?
They just crushed. Just the question was, how is America going to be? It's a fast growth kind of trendy on the coast's brand that honestly, if you go to a fancy country club out in the San Diego area, you're going to see just a huge amount of market share. And like Lululemon did about a decade ago, these guys are making the leap from one niche little product, which was sort of workout shoes for moms and wealthy moms, and they made the leap into the husbands, and now the kids. My son's running them. He's kind of a snob. The growth has been incredible. We're talking triple digits in China, which is absurd. We're talking 33%, I think it was, in America. I mean, it was one of those reports where they wanted to help you out in terms of discussing the tariffs, but it was having no impact on their business whatsoever. The growth is just off the charts, and they're really making the leap. Now, that raises the bar a lot for when we hear from Ralph Lauren. Later the next week, we hear from them. We hear from, this is another company that is priced as though it's already kind of reported what On said. So we're assuming that Ralph is going to get through this unscathed, and that remains to be seen. At 182, that's 50% ago. That was about April 8th, beginning of April. It was kind of the liberation day that we had that 1 week of just sloppiness. These shares are 50% higher from here. So the bar has definitely been raised. And after a couple of these reports, On was amazing. Aritzia and that little Canadian retailer that we follow, it's an $8 billion company. It's not for nothing. They reported 26% comps. I mean, the consumer is available to spend money right now, but he's not doing it all over the place. They're picking their stores. And, the stakes are getting higher as we get through reporting season. Remember, Spencer, you can't just listen to one of them. Everyone kind of flows to the other. American Eagle, you got to watch the reaction in Gap. You see On, you got to watch the reaction in Lululemon. Abercrombie Fitch has been running like a scalded chimp higher. It's all based on the idea that consumers are selective, but they're still going to the brands they like, as opposed to a month ago when it was priced just like the mall's closed. It's COVID part 2, the Great Depression.
That's a really great point. Nothing happens in a vacuum. We always talk about how stocks trade together, but in this case, stocks trade together plus the businesses are all eating out of the same pie. So there's only so much pie to go around. There's only so much consumer to go around. So what affects one of them will affect another one, right? It's all kind of the same. So great reminder, Jeff. Nothing happens in a vacuum. We have to look at how all this is related to the grand retail theme, whatever is happening right now. Guys, if you want, first off, we're going to be doing this stream. I think we'll do it next Wednesday as well. Maybe the Wednesday after. We'll do this during the retail earnings season. So Jeff can kind of give his thoughts on these reports as they come out. Look ahead to what is still to come. If you want to get Jeff's emails, Jeff has been writing pretty much nonstop in the last month about the effects of tariffs or now lack thereof on retail. There is a link in the description to get on Jeff's email list. If you want to actually find out which stocks Jeff owns. Hint, he owns at least 2 of the stocks we just talked about. That is in his retail portfolio. You can sign up using the link in the description as well on YouTube. It's the second link there. Jeff does a weekly video to his members. It goes out on Thursdays, so that's tomorrow. He'll send that out. He'll talk about what he bought this week, what he wants to buy, what he's trying to buy, what he currently owns, and how it's working. And Jeff, you've had a very good couple of weeks. So shout out to you.
We've been rolling. Shh, don't jinx it. Don't even look at it. We won't even talk about it. We'll just kind of respect it for what it is.
I didn't mean to say anything. I'm
just going to sit at this end of the dugout and ice up my arm between ends.
That's right.
But we're having a nice little run.
We'll be back next week. Jeff, I guess we'll find out what Walmart says tomorrow, and we'll have to wait and see what you think about that. So
fingers crossed, America.
All right. See you guys.